And I think, to me, that is the reason for the ban on interest in Jewish teaching. But to me, it's not an absolute ban. Secondly, so I would then go on to say there are benefits to credit markets. You looked on a lot of the downside, but what are the benefits? Well, you can borrow if you're a family in difficulty, if you're a company in difficulty, if you're a government in difficulty. You can rearrange, in technical economic terms, your pattern of consumption over your lifetime. So typically what you do is when you're young, you borrow, you take a house and so on, and it means you can even out your income stream throughout the whole of your life. And thirdly, obviously one can finance investment spending for growth. So I would say the case for the kind of monetary system which is developed is, if you look today at major transactions on the capital markets for developing countries or for projects in developing countries, then it's basically related to growth. Secondly, I have to go on very quickly. Secondly, interest is usury. The original meaning of usury was a use charge. It applied to any charge for the use of property. I think today, when we think of interest and usury, interest we think of as competitive markets. We think of basically made up of three things: a real rate of interest, which reflects the fact that money is more valuable today than tomorrow, and that if I invest the money, I can get a return at what technically economists call time preference in the productivity of capital. There's an inflationary element and there's a risk premium element. Usury, on the other hand, has got an element of monopoly about it. It's an exorbitant interest rate. And examples of usury, if there was one example in the UK which we came across in this commission, if anyone wants to read this, by the way, I can send you a copy if you give me your address. For example, I remember going around an estate, a really bad estate in Liverpool, housing estate, where a lot of the buildings to start with were just boarded up. It was rife with drugs. It had endless loan sharks, doorstep lending, and so on. And debt on the doorstep suggests that the average interest rate charged is 177%. That, in my book, is usury. Paul Jones, professor in the University of Liverpool, he found, looking at the community bureaus, that rates of 164 to 903. So I think there's a great difference to me between usury and interest, and I would want to condemn usury and say whenever we see usury, we should be trying to do something about it because people are really suffering because of it. Thirdly, there's the idea that debt is slavery. The rich rule over the poor, the borrower is servant to the lender, is one of the proverbs. I've got two examples in my slides here. One is low-income families in the UK. Typically, 3 million adults don't have a bank account. They typically tend to receive welfare benefits, live in socially rented accommodation, and be lone parents. They have very little savings. The Treasury estimates that 3 million people need access to credit markets as well. What kind of credit markets do they go to? The most likely regulated and the ones in which usury is most likely. If you look at low-income countries, then we know the situation. You've mentioned it yourself and so on. I needn't go through it again here, but the evidence is on the board. Fourth charge, credit markets lack transparency. Some are totally transparent. The market for government bonds, for example, is a totally transparent market. Others are not. And what we found in this report was, I'm in banking, I feel quite angry at banking because it seems to me that the branches of our high street banks today have become money shops where people are selling money and are incentivized to sell it in their compensation, and frankly, they don't take due care in asking, can the people really repay it? And I think that that is a great tragedy. And then you look at personal unsecured markets, and I've listed there a number of things where, frankly, it's translucent. You don't really know what's going on, and suddenly, you get a bill, and you didn't realize, my goodness, that's the amount that they're really charging. And then finally, the poor suffer most. 3 times in the Hebrew law, the ban on it, and it's only quoted 3 times, the ban on the charge of interest. Twice it's quoted in connection with the poor. We have debt for poor countries. We have inadequate markets. What therefore should public policy be for the credit markets? I believe the goal should be for all markets to be competitive, to be transparent, and to be accessible. Secondly, I think we need in Britain today, domestically, certain reforms to achieve this, which is what we dealt with in this. I don't believe, for example, that the voluntary banking code is adequate. I think you need something much tougher, having the law behind it. I think you need compulsory data sharing. You need increased transparency in the subprime markets. That would be my way of going about it, rather than putting a ban on interest. Thirdly, I think the community finance initiatives which we are seeing, credit unions, money lines, community banking partnerships, I think they should be encouraged. And I think the Chancellor should be putting aside a small amount of money, no more than say 25 million or something like that, and saying, in poor areas, what do we have to do? At present, no credit union, no money line, no community banking partnership is a viable business model. But in other countries, you look in Ireland, you look in America, you look in Australia, you find credit unions are viable. What would it take in Britain to make them viable? That, to me, is the way I would tackle the issue of justice. Thirdly, I think that, or fourthly rather, aid to poor countries should be in grants and not loans. And finally there, I would simply write off the whole of debt. I think actually that the HIPC initiative is actually quite disgraceful. For this reason, that the World Bank, the IMF, plus individual governments are keeping lending to countries which have no way of paying them. They're absolutely bust in terms of the loans. Why don't we just write them all off? Absolutely write them all off, because actually what we are doing at present is really wicked. We are creating jobs for middle-class people in Western countries at the expense of these countries. I remember once having a debate in 1979, just before Mrs. Thatcher was elected Prime Minister, with the man in the Treasury who was in charge, just 1 minute, who was in charge of exchange control. And in the city, there's a huge building, it was exchange control. I said it'd be far better if this building was turned over to an ice cream factory, because it would be producing something real. And finally, a quote which came out yesterday from the chairman of the Joint Economic Committee of Congress, saying, as I've said since 1970, the IMF and other IFIs, international financial institutions, should simply cancel 100% of the worthless debts owed them by poor countries. Their loans were based on mistaken policies that are now discredited, etc. Can I say, I'm really looking forward to the discussion.
Brian, quite a lot of the cases, why don't you take a microphone each and I'll hover around here so we don't have to share. Quite a lot of your case is based on there being a reasonable distinction between usury and interest, that there's interest and there's usury. How do you draw a line between that? What's, 28% usury or interest?
Well, if I can take out a mortgage on a house for, say, 12%, and I'm paying 177% if I'm dealing with doorstep lending in the Provi, I think there's a difference.
But the moral line is going to be a fuzzy one, and perhaps even more fuzzy than some of the other moral issues that we've
I mean, I think it's to do there with the numbers.
So you can't...
I'd rest my case on the numbers rather than on anything.
Well, as far as I can see, we have agreement on the fact that the current system isn't perfect, and we have a disagreement on whether the whole system is completely beyond repair and needs rethinking, or whether judicious use of proper regulation, promotion of the right kinds of institutions, debt forgiveness of the right style, we can make the current system work. Tarek, let me just ask you if you want to comment on anything that Brian said before we open to the floor.
Well, on the interest usury issue, the best study on this is John Noonan's study, which he did as a PhD thesis in 1957. It's a staunch Catholic, I think you must know. I think it's on the Supreme Court now. I think so. And he did a lot of research on the Christian prohibition of usury and how it was overturned by the commercial classes. And what happened is that for 1,000 years or so, that usury was prohibited and you couldn't obtain any benefit on a loan, no matter how big or small. That would be seen as usury. But then there was a writer called Hispanus in the middle of the 13th century in Rome who said, well, no, there's this thing called interessa, and you're allowed to charge interessa if someone is late in repaying a usury-free loan. So you couldn't lend at usury, but after the repayment date, in between that and the date on which the guy actually repaid, this was the period in between. That in between is that inter essa. And so you could charge a penalty for the period that was inter essa. And that's where the word interest came into circulation. King Henry VIII approved it up to the threshold of 10%, and anything above 10% was usury.
Oh, he had 10%. So
I think it was 10%.
Clearer than Lord Griffiths.
Well, yeah. Well, then you had actually Parliament to change the threshold. I mean, the Bank of England needed to conduct monetary policy for the ages, and Parliament would often have to pass a law saying, no, usury is now 8%, not 6%, so the Bank of England would put up the interest rate. I think that's...
Let's open it to the floor. Shana, we're going to get people, are they going to come to the mic or are there roving mics?
We've got roving mics? Yeah, we've got roving mics. We've got a roving mic, yeah.
Is this the roving mic? Is this
can we not use one of those?
Well, at the moment they're shared. I'll tell you what, I'll go share.
You can share if you want this.
Why don't we just...
It's audible, I think people can just stand up.
Maybe people can just stand up. Maybe just people stand up. Any questions, comments? Just like you to say who you are, and then we'll put it to the panel. We may